Okay, welcome back to the channel. We're here to talk about my trades. It's going well. Still having some consistency, and it feels really good to have found consistency because it was really hard. I'm so new at this, and I've only been at it for a few months, especially like the day trading stuff, the scalping, and the strategy that I have now. I've added a few things to my strategy. I haven't changed my strategy, but I've added some tools like the VWAP and supply and demand zones, and I really think that that was a game changer for me starting this week, but the last couple of days especially. So let me just show you guys here real quick. Also level 2, reading the level 2, learning how to trade basically the spreads. Definitely a game changer when you're scalping, and we're not trading stocks, we're trading the option contracts. So that's how, I'm able to make money with the small amount of contracts that I've been purchasing. But let's just go ahead and check the account out. Hopefully this isn't lagging on you guys. I hope this is not lagging. So here's the account, right? We're up 11. Well, we're up 4%, over 4% today, another $43. And I've taken the account up to over 1,100. We're at 1,124. Now, I know, it's not a lot of money, right? This is a very small amount of capital, but it's kind of like a small account challenge. And it's a challenge to myself to see, can I preserve this capital and actually grow it? And I'm not necessarily saying that I'm going to try to take this to 10K or anything like that. Like eventually, I'm going to have to put more into this account if I'm really going to grow it. So I'm not diluted in that way. But the point of this small account challenge and the point of trading with this amount of money is that I'm practicing. I'm practicing the implementation of my scalping strategy. And like I said, for those of you that may have missed the previous few videos that I've done about this, my strategy right now, my edge is that I'm in these trades for typically a few minutes, right? My first trade that we're going to look at on Neo was a little bit longer than, I wanted it to be. But I'm scalping these trades, right? I'm in these trades for a very short amount of time, sometimes 10 minutes, sometimes less than that. And I'm scalping the options. And with options, I'm not going to get into what they are and, explain it. But there's tons of videos out there that explain what options are. But basically, you're trading the premiums, right? You're buying the option for a certain premium, right, a low premium, and hoping to sell the premium for a higher price than what you bought it for. You do have to pay 65-cent commissions for every contract bought and sold, so that's $1.30. You're down already on every single contract that you buy. But I'm practicing with 1 or 2 contracts, maybe 4, maybe 5. I think there was one trade today where I actually bought 4 contracts, but I sort of scaled into it, right? I'll explain all of that and talk about all that when I show you the charts. But that's sort of my edge is, I'm just trying to ride the wave, right? I'm not looking for huge profits. I'm not looking for home runs. I'm not looking for really big, huge moves. I'm basically scalping these option premiums, right? Because the premiums go up very, very fast. And I'm scalping a little bit throughout the morning, 3 trades altogether, right? Like no more than 3 different ticker symbols and maybe 3 to 4 contracts on each one. That's my strategy. That's my edge. And that is how I've been able to find, the last few days, last week or so, consistent profit. Right now, I'm nowhere near being a millionaire, right? But, $40 on the day, I'll take it. I'll take it because there's a lot of people out there that they're red today, right? They're in the red. So I feel like I'm doing something right. I'm finding some consistency, and because I'm just focusing on the consistency, I'm not looking for the home run, and a lot of traders, they do. I mean, when I first got into this, I was always looking for the home run, right? The 1,000% gain on some, little penny stock or whatever. And it's just not that wasn't working for me. I'm just going to say that much. All right. It wasn't working for me. I had to do something different. So what I'm doing is I'm scalping option premiums. I'm reading the level 2. A lot of the times, when I'm actually in the trade after I've entered, I'm not even looking at the chart all that much. I'm charting my supply and demand zones, right? The zones where institutions are selling off, where they're selling, big, huge sell orders. And also there's areas on the charts where there's big, huge buy orders, and you can actually see these, right? I'll probably do a video in the future about supply and demand zones. So level 2 supply and demand and the VWAP. The VWAP, it's been huge because it's a fairly simple indicator to use, right? If the stock is under the VWAP, that's usually a good indication that it's bearish. If it's over the VWAP, it's bullish. So let's go ahead and get into Thinkorswim. All right, I'm using the Thinkorswim platform. I know there's some people out there that say, "Oh, Thinkorswim isn't the best," but it's working for me. It's working for me. So we're going to do this in order, right? The first trade I took was on NEO. And I'm not really even looking at the 1-minute chart. This is the other thing I forgot to say too. I was reading the 5-minute chart for the most part and level 2. But as you can see, right, we have a huge supply zone up here that definitely helped me trade NEO today. And I've also mapped out the demand zones, but we didn't get anywhere near these demand zones that I had mapped out. And I mapped these out, over the weekend, pre-market, right? This is, instead of mapping the support and resistance lines, I'm going to try the supply and demand zones because I think it's a lot more predictable and accurate. So basically, we bought puts. Altogether, I bought 4 NEO puts. They were $13.50 puts, and that was the strike price. And I got 3 of them for $85 and 1 of them for $78. So upfront cost was like, 85 times 3 plus 78. Here, let me see. 85 times 3. It was about, hold on. 85 times 3. It was $333 altogether for this trade. The money that I put into it. So let's get in here a little bit closer. So my entry was actually not bad, right? I've got 2 entries here. One, I'll actually go to the 1-minute chart so you can kind of see where my entries are. Now, I wasn't all that. I wasn't paying attention too much to the chart, other than the fact that the stock is extended, right? It's a little extended. You might even call it, I wouldn't call it overextended, but it's a little extended, right? It had a lot of upside in the pre-market, and then right at the open, you had, this huge green bar on the 5-minute chart. On the 1-minute chart, I'll show you, it looks like this. Right at the open, you had a huge rush up. Now, it had entered that shaded area, which is my supply zone. The supply zone starts at about 14. I think that's $14.33. It hit that supply zone, and then it was rejected. Now, I was a little hasty, right? This was kind of a hasty trade because it was first thing in the morning, and I saw that it rejected the supply zone. The reason that I entered it so fast after it got rejected at the supply zone was because you had the topping tails, right? You had a little bit of a topping tail on this green candle, and you had a pretty big topping tail on the red candle. And I was prepared to get out of this trade if it didn't work, but I entered at 9:35 and then 9:36, so that's those 2 candles right there. And then my first exit, I think, was on this green candle. At around 9:56. Or no, that's, wait a minute. Yeah, I might have mapped this out wrong. maybe that was actually, hold on. The 940. Yeah, that was actually another entry. Sorry. My first exit was right here. Duh, it says exit. So these are my entries, this oval and this oval, right? I got in 2 times here, and I got in once here. There's another entry over here that we'll talk about. So basically my strategy was that since it rejected at the supply zone, and I'll just show you, like, you've got this supply zone up here that I've already mapped. It got rejected, right? Later on during the after hours, it actually managed to break through, but it got rejected. And so I'm like, this is going to be my first trade, right? And the contracts are not that expensive, right? They're $85. $78 was the lowest one. That was this one I think I got for $78. And these are puts, so I'm betting on the stock going down. So I got in here at 935, 936, and at 941. And then my first exit was at 956. Okay, so I got out of one of my contracts just to try to lock in a little bit of profit, and I'm thinking, hey, maybe this is going to go down further. I wasn't planning on being in the trade as long as I was, right? You can see that I decided to enter again at 1019. So after I exited the first contract at 956, you know, it was getting back closer to where I had gotten in. And I was reading the level 2, and the level 2 is what made me confident to enter again. And I knew we had a supply zone. And between the supply zone being above where it was on the chart, the supply zone being above where the stock was on the chart, and the fact that I was reading the level 2, I felt comfortable buying another contract, which I did. And then I exited out of all 3 of my contracts around 1032 to 1033, which would have been these 2 green candles here. So I got out a little bit later probably than I should have. I should have gotten out right at the low of this red candle. I would have came out with a few more dollars. And then, you know, in hindsight, I could have held this a little bit longer, right? If I had held this, I could have rode it all the way down here and probably made about twice as much as I did. So altogether, I made about $20 on this trade, right? It was an upfront cost of about $300, $333, but I made $20. You could not do that with a stock. Like, you would not be able to buy. This is why options are so incredible, guys, is that if I bought $330 worth of NEO stock, there's no way I would be able to make $20 on a day trade, right? You'd have to buy, I don't know, maybe a $2,000 worth of NEO stock, maybe $1,000 or $2,000 worth of NEO stock to make like $20, right? If it moves a few cents, you would need a lot of shares, because if it's only moving, you know, it moved from about like, let's see, I got in around 1421 and exited around, you know, 1390. So that's like 30 cents. You'd have to have a lot of shares to make, let me see here, 0.30. You'd have to have a lot of shares, right? To make any substantial amount of money. And with the contracts, you know, even though I'm practicing with just a few of these, the idea is to scale up. And instead of buying one at a time, eventually I'll be buying like 5, 10, 20, and get in and out of these trades and be scalping 100, 200, whatever. So that was my NEO trade. I'm pretty happy with it. Let's go ahead and go to ExxonMobil. So ExxonMobil, we had some trouble with. This is actually a funny little story. On the 1-minute chart, as you can see, we had a big supply zone up here that I had mapped out previously. And then we had all these demand zones. Now, ExxonMobil, let me go to the 5-minute chart, or the 5-day chart. ExxonMobil has been on a rally. Okay, it's probably going to be due for a pullback soon. And that's just the way ExxonMobil is. It sort of trades in a range, but it's been rallying the last couple of days. And this morning had a pretty big rally, right? A pretty big rally to the upside. And it was approaching, I was watching it, and it was approaching my supply zone that I had mapped out. And I saw these topping tails on these green candles. Let me go to the 1 minute chart because you get to see a little bit more of the details here. I actually lost money on this. Now it's the reason why it's kind of funny is because I entered here. You can see I entered here at about what was that, 10:39. About 10:39 I entered, and then I entered again at 10:41. So right around this area, I entered 2 contracts. And I thought it was going to, go back down to the demand zone, right? Now, even though it was above the VWAP, which I forgot to mention in Neo, on the Neo trade, Neo was above the VWAP, which was another reason I had entered it. This was above the VWAP, but it was so extended, like I figured it was due for a pullback, and it was. It's just that I was a little bit early, right? If I had entered my put option and I bought the strike price was $43.50 puts, and they were both $63, right? So less than $200 this trade cost me. Well, it cost me a little bit more than that because I lost. I lost out on it. But if I had entered up here with a put, right, or right around this green candle or this red candle, that would have been perfect because you see there's a let me get my pencil. I like the little pencil. You can see there's a nice downside there, right? If I'd gotten in these puts, zoom, that would have been a perfect trade. But I didn't. I entered a little bit too soon, and so I need to be careful about this because, as you can see, it burst through the supply zone, which had me, that's why I got out. And I did the right thing because I stuck by my trading plan, right? I am not holding on to losers. I'm not going to do that anymore. Now, I held on a little bit too long. I think I had trouble getting out of this too because, I don't know. I for some reason, like, I was reading level 2 and I thought it was going down or something. But anyways, make a long story short, I held on to it a little bit too long, and I didn't get out till like this red or green candle up here at around 10:46. So this was, I got in at 10:39. I was out by 10:46. So, less than a 10-minute trade, like a 6, 7, 8 minute long trade. Now, in hindsight, if I had held on to these put options, I would have been Gucci, right? I would have been fine. The premium would have gone back into my favor, and then I would have made out. But this is not, we don't trade in hindsight. You have to make these decisions in real time. And in the moment, it was the right thing to do because my entry was too soon, right? Like I entered too early. That was my mistake. But as far as getting out after it had, sort of passed through my supply zone, that's when I had to get out of the trade because I didn't know what it was going to do. For all I knew, it was going to continue to go up. Right. And that could have very well happened. And I'm not hanging on to my losers. I quit that habit. For new people out there or people that are interested in doing this, that is a mistake that I made a lot. Whether I was swing trading or investing or day trading, was hanging on to losers. And that is one habit that I broke a long time ago. And I'm very comfortable just getting out of my trade. I wasn't emotional about this. I wasn't upset about it. I'm really not upset about this trade at all. I'm learning a lesson from it. I got in way too early. That's what I did wrong, right? The only thing that went wrong with this trade was I got in way too early. So I sold these put contracts that I had bought for $63. I sold both of them for $59 each. So it was only a couple dollars loss, plus the $130 on each of them for commission. So I ended up losing, I don't know, maybe like $5 or $6. So I gave back a little bit of my profit, probably like close to half of my profit from the Neo trade. But, you win some, you lose some. Like that's just part of this game. In hindsight, if I had held it, I would have been fine. But it eventually did. You can see, like, this is what a supply zone is. And this is how I know I charted the supply zone correctly. Even though it sort of broke through here a little bit, it immediately went back down under the supply zone. It challenged the supply zone again later on that day and was rejected. It was rejected several times. You can see 1, 2, 3 times it was rejected. And then finally in after hours, 4 times. 4 times. I guess you could call this 6, right? 6. Finally, on the 7th attempt, towards the end of the day, it did go through that supply zone, right? But that's what a supply zone is. It's where big institutional buyers, the demand zone, the blue zone where the demand is, that's the buyers. This red shaded area, the supply zone, those are big institutional sellers, right? So there's big institutions that have sell orders up there, and that's what's keeping the price, underneath that shaded area. But I did the right thing. I got out. I didn't hang on to a loser, because even if I had held on to the loser and made money, I don't want to be in that habit where I'm hanging on to losing trades, because it doesn't always work out that way, right? It would have worked out for me on this one, but in most cases, if you hang on to losing trades, you are going to be a loser. And I was losing for a long time before I, really learned that lesson. We're going to go to PayPal here next. But so PayPal is kind of funny because, as you can see, we've had a couple of huge down days now, right? Friday, huge move to the downside. Today, another huge move to the downside that I missed. And why did I miss it? Because I was trading NEO and ExxonMobil. PayPal was under the VWAP, so I should have known that this was the one I could have been trading. But the thing with PayPal is the option contracts are a lot more expensive. It's a bigger stock, right? ExxonMobil's a $40, $45 stock. NEO's like a $10, $13 stock. This is almost a $200 stock now. So the premiums for these option contracts, they're going to be a lot more. Now, so this was my third trade of the day. As you can see, I had a couple of supply zones mapped out from Friday, right? These were some pretty big supply zones here. And, I was waiting to kind of see what was going on after pre-market at the open. And at the open, it didn't even, you can see here, it didn't even attempt to challenge the supply zones up there. And so I was kind of watching it a little bit. Oh, this is the 5-minute chart. Let me go back to, I'm getting confused here. Yeah, you can see it didn't even try to challenge the supply zone, and it immediately took it down to the upside. The problem is that I didn't really have any good demand zones mapped out for like miles away, right? The demand zone where I think a lot of these institutional buy orders are at is still like another $10 away. So the problem with this, the reason I didn't trade it sooner, and I should have traded it sooner in hindsight, but the reason I didn't is because I wasn't sure how far we were going to go. We had already dropped very far from Friday, and remember, I was kind of upset because I missed that move. Well, I missed the move again. So this is the 1-minute chart. PayPal went all the way down from about 199, 200 I think was the high. Or no, not even 200. 199 was the high, and it went all the way down to like 191, 190. Now, I got in way too late. I should have got in up here. I had so many chances to get in this, right? And it was under the VWAP. So the VWAP is good because if the stock is under the VWAP, it means that it's a bearish, a bearish stock if it's under the VWAP. And it was also under, the moving average. So I had a lot of reasons to get in this stock. I just, the premiums are a lot. So I was a little hesitant, but I bought one put contract for $300 and I ended up selling it for $335. Remember, I have to pay commission on that. So I only made like, I made like less than 35 on it. But it was, let's see, I got in at 1049, right? And then I was out by 1051. I got lucky on this, right? I got out on this green sort of like doji bar candle right here. Got out a little bit too late. I should have gotten out earlier. Probably should have gotten out at the bottom of this red candle. I got lucky on this because this reversed. If I had held on to this any longer, the stock would have reversed on me and I probably would have had to sell it for a loss. So I'm glad that it was a quick little trade. I figured it was going to be quick when I was reading the level 2. And when you're reading the level 2, like especially on these bigger stocks, I mean, the spread was like, there was, probably like a 20-cent spread on this. And you have to wait until the spread gets closer together and then you get in at a price that you can work with, right? $3 per share or $300 contract. That was the price that I felt like I could work with. And, it immediately started climbing and, I think it got as high as like 345. I should have sold it then, but I sold it at 335. So I still made some profit. It was a quick trade. I'll admit this is probably a little bit of luck. I don't want to say it was like luck entirely, but it was a little bit of luck just because this was the very bottom of the low, right? Like this was the bottom, at least for today. And I bought a put right at the bottom. That's never exactly a good place to be, but you can see that this stock, it did a full reversal and kind of traded a little bit in a range for the rest of the day, right? We had a nice range here, went up, back down. I guess you could call this kind of like a period of consolidation. And this is what this stock will probably do the next couple of days, is just sort of consolidate around, I'd say the 190 to 200 price. Maybe it'll go lower, but what was I going to say? Like getting in at the bottom here, this sort of just shows me that if I'm going to trade these stocks, I need to know where the demand zone is, right? If a stock is falling, I need to know, because I'm sure if I look back on this stock, there's going to be a demand zone. I would be able to chart a demand zone, whether it's 5 days back or 10 days back. There are institutional buy orders here, and that is what kept the stock above this, $192 price. PayPal is probably going to have a move back up to the upside sometime soon. The pattern has been that it has like maybe 2 or 3 down days, a couple days of consolidation, and then it goes back up. So I'm looking probably to try to catch one of those big moves back up. If the opportunity is there, I'll be looking to make sure PayPal's over the VWAP. I'll be making sure to see that it's being supported at the demand zone, and I'll be reading level 2. So, a great way to start the week off. I'll just show you where we are with the account again. Over $1,100, $1,124, up over 4% today in the account, 4.4%. So, couldn't be happier. I think it's progress. It's definitely better than being in the red, and it feels a lot better than being in the red. So that's what I'm going to continue to do, is just be consistent, just consistently grow my account, not, to only take 3 trades a day, right? Like this is all part of my trading plan. I have a trading plan. Everybody should have a trading plan, and you just have to stick to it, and you got to cut your losses as soon as you possibly can. So yeah, that's about it. Just wanted to share that with you guys. I will be back later on this week. And as always, this is CMC Broadcasting. I'll see you next time. God bless.